Hey everyone, and welcome back to the Babalian Money Show. It's great to see you here. So the moment many have been dreading has arrived. The headlines are screaming it. Your portfolio might be feeling it. And the mood on Wall Street is, let's say, a little gloomy. Yes, we are officially in a bear market. It's a term that can strike fear into the hearts of even seasoned investors. But before you start panic selling your stocks or stuffing cash under your mattress, I want you to take a deep breath. In today's video, we're not going to panic. We're going to make a plan. We'll break down exactly what a bear market is, why it's a natural part of the economic cycle, and most importantly, what actionable steps you can take right now to not just survive, but potentially thrive. Stick around, because this might be one of the most important videos you watch all year. First things first, let's get our definition straight. What exactly is a bear market? Technically, it's when a major market index, like the S&P 500, falls 20% or more from its recent highs. Think of it like the opposite of a bull market, where everything is charging ahead. In a bear market, the bear is swiping downwards, pushing prices lower. This is usually driven by widespread pessimism, negative investor sentiment, and fears about the economy, like rising inflation, interest rate hikes, or potential recession. It sounds scary, and seeing your account value drop is never fun. But here's a crucial piece of perspective. Bear markets are completely normal. They have happened many times throughout history, and they will happen again. Since 1928, there have been over 25 bear markets. And what happened after every single one of them? The market eventually recovered and went on to reach new all-time highs. It's not a question of if the market will recover, but when. Understanding this history is your first line of defense against making emotional, fear-driven decisions. Fear is the enemy of a good investor, and knowledge is its antidote. So the big question, what do we do now? The first and most important rule is, don't panic sell. I know it's tempting. Your brain is screaming at you to stop the bleeding and sell everything before it goes to zero. But selling in a panic is one of the worst financial mistakes you can make. You're essentially locking in your losses. Remember that old saying, buy low, sell high? Panic selling is the exact opposite. You're selling low out of fear, and you'll likely miss the eventual recovery. Think about it. If you had sold during the 2020 crash or the 2008 financial crisis, you would have missed out on one of the strongest bull runs in history that followed. The pain of seeing your portfolio drop is temporary, but the regret of selling at the bottom and missing the rebound can last a lifetime. So step away from the sell button. Take a walk, do something you enjoy, and remind yourself that you are a long-term investor, not a day trader. Okay, so if we're not selling, what are we doing? This is the time to reassess your financial situation and your original investment plan. Ask yourself, has anything fundamentally changed about your long-term goals? Are you still saving for retirement in 20 years? A house down payment in 5 years? If your time horizon is still long, a bear market is just a temporary storm on a very long journey. This is also a perfect time to look at your risk tolerance. If you're losing sleep and feel completely overwhelmed, it might be a sign that your portfolio was too aggressive for your comfort level. That's okay. It's a valuable lesson. Don't make drastic changes now, but make a note. When the market stabilizes, you can rebalance your portfolio to be a better fit for your emotional well-being. A plan that you can't stick to during tough times isn't a good plan. Use this as a learning experience to build a more resilient strategy for the future. Now for the part that might sound a little crazy to some, but is what separates savvy investors from the rest. A bear market is a massive opportunity. That's right, an opportunity. Remember that buy low, sell high mantra? Well, right now, prices are low. High-quality, fundamentally strong companies are essentially on sale. Think of it like your favorite store having a 20%, 30%, or even 40% off sale. You wouldn't run away from the store, you'd run towards it. This is your chance to buy shares of fantastic companies at a discount. If you have a steady income and some cash on the side, now is the time to consider deploying it. The strategy here is called dollar cost averaging. This means investing a fixed amount of money at regular intervals, regardless of what the market is doing. When prices are high, your fixed amount buys fewer shares. But when prices are low, like now, that same amount of money buys you more shares. Over time, this averages out your purchase price and significantly lowers your risk. If you're already contributing to a 401k or another retirement account, you're already doing this. So keep it up. Don't stop your contributions. In fact, if you can afford it, consider increasing them. These are the moments when future wealth is built. Let's talk about what to buy. During a bear market, it's not the time to gamble on speculative, high-risk stocks. Instead, focus on quality. What does quality mean? It means companies with strong balance sheets, little debt, consistent cash flow, and a durable competitive advantage, what Warren Buffett calls a moat. These are the companies that can weather an economic downturn and come out even stronger on the other side. Think about blue-chip stocks, industry leaders, and broad market index funds like an S&P 500 ETF. By buying an index fund, you're buying a small piece of 500 of the largest U.S. companies. You're diversifying your risk and betting on the long-term success of the American economy as a whole. History has shown this to be an incredibly effective and reliable strategy. You don't have to be a genius stock picker. You just have to be consistent and patient. Another crucial step is to review your cash position. Having an emergency fund is always important, but it's absolutely critical during times of economic uncertainty. This is a cash reserve, typically 3 to 6 months' worth of living expenses, kept in a safe, easily accessible place like a high-yield savings account. This is not your investment money. This is your life happens fund. If you were to lose your job or face an unexpected expense, this fund prevents you from having to sell your investments at the worst possible time when they're down. If you don't have a fully funded emergency fund, now is the time to prioritize building it up. Cut back on discretionary spending and funnel that cash into savings. This financial safety net will not only protect you in a crisis, but also give you the peace of mind to stay invested and stick to your plan, knowing your immediate needs are covered. It's the foundation upon which a strong investment house is built. I also want to emphasize the importance of diversification. You've heard the phrase, don't put all your eggs in one basket. This is why. If your entire portfolio was in 1 or 2 tech stocks, you're probably feeling a lot of pain right now. A well-diversified portfolio spreads your investment across different asset classes, like stocks, bonds, and maybe even real estate or commodities. It also means diversify within those classes, across different industries and geographic regions. While stocks may be down, perhaps your bonds are holding up a bit better, cushioning the blow. Diversification doesn't guarantee you won't lose money, but it dramatically reduces the volatility of your portfolio and helps smooth out the ride. If your portfolio isn't diversified, use this as a wake-up call to rebalance into a healthier mix once things calm down. Let's do a quick recap of our bear market action plan. 1. Do not panic sell. Stay calm and stick to your long-term plan. 2. Reassess your goals and risk tolerance for the future. 3. View this as a buying opportunity. Continue to invest through dollar cost averaging, especially in high-quality companies and broad market index funds. 4. Fortify your emergency fund. Cash is king in uncertain times. And 5. Ensure your portfolio is well diversified to manage risk. Following these steps will shift your mindset from one of fear to one of opportunity. You'll stop seeing the red in your portfolio as a loss and start seeing it as a sale. Remember, the market has always recovered. The fortunes of the next decade are often made by the investors who were brave enough to buy when everyone else was scared. Before we wrap up, a quick but important disclaimer. I am not a financial advisor, and this video is for educational and entertainment purposes only. All investing involves risk, and you should always do your own research and consider consulting with a certified professional to make decisions that are right for your personal situation. This is a challenging time, but it's also a time filled with potential. By staying informed, disciplined, and focused on the long term, you can navigate this bear market and come out stronger on the other side. You've got this. If you found this video helpful and want more straightforward content to help you build wealth and navigate the markets, please do me a huge favor and hit that like button. It really helps the channel out. And make sure you subscribe and turn on notifications so you don't miss our next video. Thank you so much for watching the Babalian Money Show. Stay strong, stay patient, and I'll see you in the next one.